As expected, Bank of Canada has raised the interest rate again by 25 basis points, and now the prime rate is sitting at 6.95%. We have not seen this level of prime rate in the last 20 years or so. So this is significant, guys. Okay, so that means it's going to cause a lot of problems in the economy, because especially when you see the private debt level in Canada is all-time high. Like when you look at the private debt to GDP ratio for Canadians, it's even higher than what we used to have in Japan in 1990s in their real estate bubble peak. So this is how the insane debt level we have in the system. I know that you guys will say the rate was 18% in 1990s. What are you talking about? Yes, the rate is still lower than what we used to have in 90s, but the level of debt we Canadians has accumulated over times, it's off the chart. We have not seen any examples closer than Australia maybe. So this is the problem, guys, because I think a lot of economists are seeing that the interest rate must go up because inflation is still high, it's sticky, and the GDP numbers came out stronger. But as I mentioned in my previous video, that the GDP numbers came out because we imported a lot of people from outside. Million plus people came into this country last year to spend money in the economy. So GDP is all about consumer spending. If you have people coming in with money, they will spend. Of course, GDP number will go up, but that doesn't mean that the economy is strong. Okay, the existing Canadians are struggling, especially the middle class people. Those are the ones who are going to get crushed. Those are the ones who are paying mortgages. Those are the ones who are paying car loans, credit card loans, right? They will get crushed because of these higher interest rate. So there was a hope that the Bank of Canada is going to continue the pause so that people can start settling down with their debt levels and then consolidate their payments somehow. But now this is back on the table, as I expected in my last video. This is going to continue further causing havocs in their financial lives. Most definitely this will put the brakes on the real estate market immediately, because this, even though it's a 25 basis point rate hike, it's going to create a symbolic effect, an emotional impact on the buyer's mindset. So the buyers will likely to pull get themselves out of the game and say, okay, let me see where this is going. Maybe I won't be able to qualify for mortgages anymore if this goes again 25 or 50 basis point next month or next quarter. So I think the buyers will now think twice before they pull the trigger, because keep in mind that renting is still cheaper today than buying. Like if you take a look at a 3-bedroom townhouse in Milton area, you can rent it out by $3,000 a month. Okay, but the same house, if you want to buy, it's going to cost you around $800,000, right? For $800,000, you have to, if you put, let's say, 10% down, buy CMHC insurance, you will be ended up paying $4,000 a month plus taxes, etc. So renting is still cheaper than buying. So the buyers who were looking to buy property, in the last month, now they might be thinking, okay, maybe it's too expensive, or it's getting too expensive to buy now. Maybe I should just wait and see where this is going to settle, and then I'll come back and try my luck. So that's what I think the psychology will play in the buyer's mindset. So definitely this will put some brakes into the momentum we saw in the last 2 months in the real estate market. But then this will also create a lot of struggle for the middle class families. Credit card payments, car loans, mortgages. This is going to cause a lot of issues. Plus, the private debt, as I mentioned, it's 200% of GDP. This is not government debt. This is private debt, private corporations, small, medium businesses, households. These will get crushed. These people will get crushed because if you're not seeing any economic activity other than consumable goods being sold, then you're not basically producing any goods and services, right? So basically this will squeeze the whatever the buffer we have in the economy. People will actually use that, and then in the end, I don't know what's gonna happen. The recession is almost imminent. The definition of recession is that it's going to slow down the economy in a way that your GDP becomes negative. If we did not have those 1 million immigrants, the GDP could have been negative for sure, right? So the recession is there. We just kick the can down the road. Okay, if we did not have those immigrants, we would not have positive GDP, in my opinion. Could be wrong, but this is just my observation. So now the interest rate is going up, both variable, HELOC immediately, and then fixed mortgage rates are also going to get higher because the bond yield. So we saw the bond yield immediately spiked, which will also push the fixed mortgage rate as well. Hope this is helpful. Let me know what you think about this whole activity and how you see the economy is going forward, especially in the housing market. And I'll see you in my next week video. If you like this video, don't forget to subscribe and like and share as well. So take care.